Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's Friday, May 22nd, 2026. The Dow just printed a fresh record, the S&P stayed firmly bid, and the Nasdaq held green, and this happened despite some of the biggest AI names cooling off. That's the tone today, constructive risk-taking, but with a clear shift in leadership. The market didn't need the usual mega-cap generals to do the heavy lifting. The troops showed up instead. Looking at the S&P 500 heat map, the first impression is simple, a sea of green. But the read-through is a lot more interesting. Several of the biggest mega-cap leaders were red, but the index didn't care because participation broadened out. Healthcare pops with deeper greens, and you can see strength spreading across industrials and financials. Meanwhile, parts of communication services and consumer discretionary look mixed to soft, dragging down the heavyweights. So, what explains that heat map? Rotation? Capital moved away from the crowded megacap AI and communications services leadership and into a broader mix. Think healthcare on the defensive side, plus financials and industrials on the cyclical side, lagging behind communication services and consumer discretionary. The key takeaway here? Money didn't leave the market, it just changed lane. Today wasn't your classic risk-on versus risk-off battle. It was valuation-heavy leadership versus healthier breadth. The market held together even with mild profit-taking in some headline tech bellwethers. That's a very different character than a top-heavy melt-up, and inside semiconductors, not uniform at all. We saw real dispersion. Some names were ripping, while others pulled back. Add in softer crypto proxies, and you get a constructive but picky tape. On the chatter front, the big talking point was Qualcomm's outsized jump. That kind of move always pulls a lot of narrative with it, but the specific headline catalyst behind the surge, still unconfirmed. The other running storyline was a decrowding in mega-cap AI. But that's more of a positioning narrative than a hard data point. Bottom line, it's interesting tape reader talk, but keep it labeled as unverified. Let's start with Qualcomm. QCOM surged over 11.5%. A true outlier print for a large-cap semi-name. And it mattered, because it happened on a day when the AI bellwether, Nvidia, was down. That combo reads as dispersion inside chips, not just a single crowded trade lifting everything. One quick note, the exact catalyst for Qualcomm's move wasn't confirmed today. So, treat the why as unresolved, and focus on the tape's message, rotation and re-rating inside semis. Speaking of Nvidia, it slipped almost 2% on what was still a broadly green day. Analysts are framing this as mild profit-taking and leadership cooling in the AI space. What makes that significant is the lack of index-level damage. When Nvidia is red and the market still advances, that's a classic rotation without damage look. So here's the setup. Does leadership reassert, or does the market keep broadening without it? Merck was one of the cleanest leadership tells of the day. MRK jumped over 5.5% after getting a European regulatory nod for a Keytruda-Padcev combo in bladder cancer. In a session defined by rotation, this kind of catalyst-backed healthcare strength gave the tape a sturdy backbone. It really helped explain why the heat map looked so constructive, even with that mega-cap tech softness. Alphabet was a great example of the day's quiet handoff. GOOGL fell just over 1%, and that weakness contributed to a mixed to soft look in communication services. But the bigger takeaway, the broader market absorbed it. This is exactly what breadth days look like. Big tiles can be red, and the index can still climb, because participation is stepping up from elsewhere. AMD rallied nearly 4%, even while Nvidia eased. That matters. It supports the idea of rotation within AI and semis. Buyers still wanted exposure, just not at the most crowded leadership point. It's also why the Nasdaq managed to stay green. Strength showed up in select semis, rather than a uniform megacap tech bid. Goldman Sachs added just under 1% as financials rallied right alongside the industrials. This one is less about a headline and more about confirmation. The Dow hit a record, and financials were a big part of that tone. It fits the day's troops over generals story perfectly. Money is flowing into cyclical groups, not just hiding in the same mega-cap tech basket. Looking ahead, the calendar matters. US markets are closed Monday for Memorial Day, so the next session is Tuesday. Tuesday morning at 10 Eastern, we get Conference Board consumer confidence. The forecast? 91.9. Then, Thursday is a huge macro cluster. Core PCE month-over-month is forecast at 0.3%, alongside preliminary GDP jobless claims and new home sales. After a breadth-led rotation day, these prints will decide if leadership snaps back to mega-cap tech or if the broadening trend keeps running. Let's wrap it up like this. The Dow hit a record, the S&P pushed higher, and the message was all about breadth. Mega-cap AI cooled a bit, but the market didn't crack. It rotated. Next up, watch whether the new leadership groups healthcare, financials, and industrials can hold their ground after the holiday, and we'll see if the mega-cap AI complex reclaims the wheel or keeps sharing it. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.